It began as a quiet shift in policy, but beneath the surface, something far bigger was stirring. A decision from the Treasury that many workers never saw coming. A decision that critics say is not just a financial cutback, but a symbolic blow to the very people who kept the country running during times of disruption and crisis. It wasn't just another budget announcement, it was the beginning of a new storm in Westminster. Before we go deeper, don't forget to like this video, subscribe to the channel, and leave your comment below. Your voice always matters here, and your engagement helps this story reach more people. So hit that button now, more explosive stories are coming. Chancellor Rachel Reeves now finds herself at the center of fierce criticism. She is accused of delivering what business leaders call a further slap in the face for workers by pushing forward with a decision that could impact around 300,000 people across the UK. The Treasury has officially confirmed that the flat rate working from home tax relief will be abolished from April 2026. For years, it allowed employees forced to work remotely to claim a simple, stress-free allowance. But that era is coming to an end. The allowance, a weekly £6 tax rebate, might seem small. Yet Revenue and Customs has already calculated what the loss means. Basic rate taxpayers will pay £62 more per year. Higher rate taxpayers will lose £124 annually. And just like that, a simple benefit that millions depended on will be gone. Business leaders across the UK didn't hold back. They condemned the move as insensitive, especially for workers who don't choose remote work, but are forced into it due to lack of office space or disability-related needs. Kate Underwood, founder of Southampton-based Kate Underwood HR and Training, didn't sugarcoat her words. She warned that this will hit those who have no choice but to work from home. If you worked from your spare room to keep things going, the government's thank you gift is basically about that £6 a week, we'll have that back now. She went further, calling the change a direct hit for people who have nowhere else to go or who need adaptations just to stay employed. And that was only the beginning of the backlash. David Sterling, an independent financial advisor at Belfast-based Mint Wealth Limited, repeated the most painful phrase of the day. He called the policy a further slap in the face for workers. Sterling added that remote staff will now face a new wave of bureaucracy. He painted the picture very clearly. Home workers will now need to provide receipts, face extra admin and the delightful task of proving they boiled the kettle. The simple, no questions asked system will officially end in April 2026. The only remaining option will be for employers to refund specific costs, but only with evidence. Paperwork. Proof. Receipts. Every little thing documented. However, there is still a window left. For those who worked remotely in recent years but haven't yet claimed, the clock is ticking. They can still apply for backdated claims for the current year, and the previous 4, before the door finally closes. The warnings continued. Colette Mason, AI consultant at London-based Clever Clogs AI, attacked the decision from a different angle. She called it spectacularly short-sighted. She warned that the money saved is nothing compared to the long-term consequences. With extra admin and more red tape, she predicts that companies could accelerate automation and cut office jobs altogether. The small amount the Treasury saves by scrapping this relief will be dwarfed by the long-term loss of revenue from wages and payroll taxes. Samuel Mather-Holgate from Swindon-based Mather and Murray Financial added another concern. He urged the government to protect disabled workers. For fairness, there should be a carve-out for disabled people unable to work in the office, and the government should look again at this cohort. But the twists did not end there. While removing tax relief, the Chancellor confirmed another major change: the national living wage will rise again. From April 1, 2026, it will increase by 4.1%, moving from £12.21 to £12.71 per hour for workers aged 21 and over. Increases. Cuts. Savings. Costs. Every part of the story feels like a puzzle where one financial benefit is gained, but another is taken away. And still, the Treasury has yet to respond to the accusations, the warnings, and the calls for a rethink. So now the real question emerges, is this just a simple budget adjustment, or the beginning of a deeper shift in how the government treats remote workers? Is the removal of this relief a minor financial detail, or a signal of a bigger agenda that will reshape the future of work in Britain? The debate has only just begun. Don't forget to subscribe, like this video, and leave your comment below. Share your thoughts, because this story is far from over.